Hello students and welcome to the video on cash budgets. So this is a question which is an example for how cash budgets can be asked. It's quite interesting. So I want us to read together. It says Boom Boom is currently under financial pressure. With the South African economy performing poorly and continuous increases in the petrol price, consumers are strapped for cash and decreasing their spending. Planning their cash flow has become very important. The following is provided to you, and they've given you the total sales, total purchases, labor costs are question marks, and overheads were given as question marks as well. In the additional information, they say total sales are made up as follows. 40% is cash sales, 60% is credit sales. Then credit sales are collected in the following manner. 20% in the month of sale, and customers receive a 2% discount. So we should not account for discount, of course, because we do not record income and expenses for the purposes of the cash budget. However, we need to take into account our discount factor, which will be 0.98. Then there's a 30% in the month after the month of sale, 40% in the month thereafter, and then 10% is irrecoverable. Again, bad debts are not recorded in your cash budgets because the very problem with bad debts are that it's not a cash flow. It is money that cannot be collected from debtors, and therefore it cannot be accounted for as a receipt or a payment. Then the selling price for a unit is 120 Rand. Then they said all purchases are done on credit. 60% is paid for in the month of purchase, and Boom Boom qualifies for a 2% discount. Again, discount not accounted for here as an income, but the factor needs to be taken into account, which will again be 0.98. The remaining purchases are made in the month after, or the remaining purchases are paid for in the month after purchase. Closing stock for the month is based on 10% of the current month's sales plus 40% of the next month's sales. They say labor costs are calculated at 35 Rand per production unit, and labor costs are paid for as they are incurred. Overheads are calculated at 20 Rand per production unit. A total of 20% of this amount represents depreciation. Dividends, I beg your pardon, of 100,000 Rand is due to shareholders on 28 February, and during February, new equipment is purchased at 150,000. The opening bank balance on 1 February is 500,000. You need to compile a cash budget for the month of February. Right, so let's see. I've already drafted for myself just a skeleton layout of the cash budget. So we have opening bank balance, we have receipts, we have payments, we have closing bank balance, and they tell us that the opening bank balance is 500,000 in February, at the beginning of February. So I want to read the question and perform calculations as in the same sequence as the bullets given. So the first one says it's 40% cash sales, 60% credit sales. So if I go to February, it's 480,000 Rand sales in February. So 40% thereof is cash sales. So I'm going to go under receipts and say cash sales. This means I will take the 480,000 times by 40% cash. That gives us 480 times 40%. Then the credit sales, they say, is 60% of the total sales, and they give you a sequence in which it is collected. So they say 20%, 30%, 40%, and then there are some bad debts. Please note that if it's paid for in the same month, you get a 2% discount. So I'm going to do my support calculation for this, and I'm going to call it a debtor collection. And here I need my credit sales. And I'm going to need the months of January and February. I don't need to calculate March because March was not required. Then downwardly, I'm going to say January and February again. So for the credit sales, it was in January, 600,000 Rand sales at 60%. And in February, 480,000 Rand sales at 60%, which constitutes credit sales. So there's the 600 total, there's the 480 total. Right, now I need to follow the sequence. They say in the first month they pay 20% and they get a 2% discount. So for January, we will pay in January of the 360,000, we will pay, or we will receive, the debtors will pay, we will receive 20% 20%, and we will give them discount of 2%. For February, we will collect 30% of the 360, so it's 360,000 at 30%. In February, we will not have any collections during January because of the debtor only, or the sale only took place to the debtor in February. The debtor will not already pay in January. So for February, it's going to be the 288,000. We're going to times that by the 20% that is collected and by the factor of 98%. That gives us the sum of, and the total collection then is 164,448. So I'm just going to write there debtor collection, and that equals the amount that we added up there. Righty. The next bullet that I see says that the selling price is 120 Rand per unit, and then they talk about purchases. They say all purchases are done on credit. 60% is paid for in the month of purchase, and you get 2% discount. Remaining, which should be 40%, is paid for in the month after purchase. So this will go under payments to creditors, and now I have to go and do my calculation. So again, I'll have a support calculation, and I call it creditor payment. And now I will have credit purchases, and again, January and February. Downward in the description column, Jan and Feb. Then the credit purchase are all the purchases. So if I go back to my block, they say it's 250 and 200 for January and February. So I'm filling it out. So in January, I'm going to say we collect 60%. So it's going to be 250 at 60%, and we qualify for a 2% discount. In February, we collect the other 40%, so that's 250 at 0.4. Again, for January, we will have no payments that relate to February, but in February, we will again have the 200,000 times 60% times 0.98. Let's just check again. So yes, 60% in the month of purchase. I'm going to get the sum there. And that is 217,600. So I'm filling it out. Creditor payments equals this amount. Righto. The next entry says that closing stock is based on 10% of the current month's sales and then plus 40% of the next month's sales. Labor costs are calculated at 35 Rand per production unit, and they are paid for as they are incurred. So we need to know what the production units are, but we can't calculate it because we have a formula for the closing stock. So yet again, I need to go and do a support calc. So I'm going to say here, production units, and for the production units, we need the sales units, we need the opening stock, and we need the closing stock. And I again have January and I have February. The sales units will be easy to calculate because we have total sales and they tell us it's 120 Rand a unit. The sales were 600 and 480,000. So I'm going to say that's 600,000 divided by 120 Rand a unit. I'm going to say the 480,000 divided by 120 Rand a unit. Then I can calculate the closing stock for January, because they say it is 10% of the current month's sales plus 40% of the next month's sales. So I'm going to take the current month's sales was 5,000 units at 10% plus the next month's sale, which is 4,000 units at 40%. And that gives us closing stock of 2,100. Closing stock will become opening stock, and you should know when we calculate production units, opening stock is deducted. So I'm just going to say minus 2,100. Then I can calculate closing stock as well, but I will need to do the March units as well. But they say that in March it was also 480,000 Rand sales. So it's 480,000 divided by 120 Rand a unit. Then the closing stock here, I will say it is for the 10% of the current month. So it's 4,000 times 10%. Plus 40% of the next month's sales, which is 4,000 for March, times 40%. And that gives me 2,000 units in closing stock. Then I can get the production units for the month by adding those together, and I get 3,900 units of production. If I then go to my labor costs, which is a payment, I'm going to say it is the 3,900 units that are produced at 35 Rand per unit. So the total labor cost should be 136,500. Then we have our overhead costs. And if I look at the overhead information, it says it's 20 Rand per production unit, but now we need to be careful because they also say 20% of this amount represents depreciation. So I'm going to start by taking this 20 Rand. So for overheads, I have a support calculation as well. And the total is 20 Rand. However, depreciation is, as indicated here, 20% of this amount. So I'm going to say, what is 20% of 20 Rand? And that is 4 Rand. So I'm going to say, therefore, my overheads are actually excluding of the depreciation. It is the 20 Rand minus the 4 Rand depreciation, which is actually then 16 Rand per overhead unit. So for the overheads, I'm then going to say that it's per production unit, so therefore it's 3,900 times 16 Rand, and that gives us 62,400. Then they say the dividends of 100,000 Rand is due. I'm going to fill that in. Payments, dividends, 100,000 given. And then we also buy equipment. And that was 150,000, I believe. Right, that seems like we have now addressed all the line items in the question, so now we can go and get to our totals. So I am going to calculate the sum of all the receipts. I'm going to calculate the sum of all the payments, and I make it negative because payments should be negative. And then I can calculate my closing bank balance, which will be the 500,000 opening balance plus the receipts plus minus the payments that we've calculated, and that leaves us with a closing bank balance of 189,948. All right, so that was a quick explanation on a calculation for cash budgets. I think it's rather interesting. I hope that you have enjoyed this video, and then I will see you in class if you have any other questions relating to cash budgets. Till then, goodbye.